Hey, it's Mack with PriceActionTradingSystem.com, and it is Wednesday. It's August 26th. This will be our chart lesson for today. And again, the volume is extremely wild. The volatility is up. So many entries that it'd take us all day to go through them. So I'm going to do something a little bit different again today. I'm just going to talk about our theory a little more than I usually do instead of talking about the trades, and we'll talk about what we look for and how we determine certain things and just show you how the price action works, that kind of thing. So um, that's going to kind of be our goal for today. And the first thing I want to show you is this was the first leg up, then we had a correction. And notice this correction it's probably a little bit more than a 50% correction, but that is where a lot of your corrections will find support, around 50%. But there was different ways to find these lows here, other than just saying, hey, it's about 50% and then it starts going the other way. I mean, that's a little bit difficult to do. Um, Obviously, at about a 50% level, you can start looking for things to, reversal type patterns. But generally, the clues are all there. And first thing I'll show you is this was the first move up during the overnight. Notice that we're moving up, you get a break, and you get two almost perfectly measured legs up. There's leg one, and then there's leg two, and you can see they're almost two perfectly measured legs up after a break, and then we get a reversal. Let me back out just, well, let me stay out first. And then we start trending down. You could have looked at this a couple of different ways. I think there's a two-tiered channel here, but really, if you saw it like this, that's okay too. But you're breaking your new low, and then we continue to go lower. So that's probably a shorter term trend in there, inside this bigger one. And then there's also a shorter term one in here, and there's much more shorter term ones all the way down through here. So, but when we started going lower here, this looked kind of rangy, especially when we started bouncing across here. So once we started lower, um, you measure your range, and the reason I picked this point was because that's where you got the most touches. You could have gone up here and measured that one to see what you got as well, just to see. And but I measured it from here because I usually look for the places it got 3 or 4 touches across here, versus only one up here. And so that was the reason I was measuring from there. And then you move that down, and so that's where I put my line when we started heading lower. And you see we went just a little bit further before we reversed. So that's one way. The other way was I measured this first move down before we had this little two-legged correction in here. And if you measure that one and move it over, that gives you a target here. Notice we reached that to the tick. It bounced. It ended up going a little bit lower, but what it was doing, um, most likely, is we were trying to reach this measured move on a possible range up here. And so I'm sure more people were looking at that. But once we started going higher, especially once we broke out here, I would be looking for a measured move based off of this first move before we got the 50% or so correction here. And if you drag that over, you can see we're headed there now. Will we get there? I don't know, but that would be my first target until something changes or it starts working the other way. And then again, there's a short term trend. Let me get that out of the way. Working up right here, you get the break, a new high, and then you get a correction. And then you got another one with a correction, another one with a correction, a new high and a correction. And so there's shorter term trends all the way up through here. So those are the things that you look for. And particularly when you get a move like this and it starts correcting, uh, look for those 50% moves. Look for something to happen around that, somewhere between that, around that 50%. It could be a little bit less or a little bit more. If it goes a little bit more, the market's probably weaker. If it comes up a little bit less, that means the market might be stronger. Or it could mean nothing. It could just be that's where the prices found support and they reversed and went the other way. We really don't care for the reasons. Um, I like to try to understand what causes a lot of this stuff, but in the end, sometimes we just don't really know, and it doesn't really matter. It's just like the news. It doesn't matter what the news tells you. because you can't judge what's going to happen based on the news. It could be very positive news and the market sell off like crazy. And it could be very negative news and the market rally like crazy. So, never try to judge your trades by the news. Just understand that the news will affect it in a lot of cases, and be prepared to do whatever you got to do based on the price action. So that was the one thing I wanted to talk about. The other thing I wanted to talk about was what these reversal patterns look like, because that is a very important skill that you need to be able to see. And let me show you something here. Really all the way up here, notice what happens when prices come back to the EMA. They don't go right through, they bounce. Even though they went on through, they bounce, they find resistance there. Notice there, notice here, it bounced a little bit before it went through, it comes back, it bounces around the EMA. Well, look what happens this time. It bounces there, but then it keeps working lower, and it shoots way on down, and it has a hard time coming back, and you really get two legs up, and it sails off. And so that's kind of what you're looking for when it comes to reversal patterns. Come back over here on the other side and look. It really was bouncing through on both sides, but that was because this was kind of a range type action across here. But you still had to pay attention to this downtrend, which is probably the bigger pattern. Actually, I think the range looks like it was the bigger pattern because it came into play more than the downtrend here. But notice what happens here. Several times it tries to get through, and it does actually get through, and it keeps getting and going lower. And then finally it gets through, and it just keeps on going. And so that's what reversal patterns look like. Then it comes back and starts testing on the other side until it finally gets through here. But the reason it came back here was it was coming back to test that trend line. This is very obvious. This is a very clear two-tiered channel. You can see it, the midline, the upper trend channel, and the trend line all acting as support and resistance, and that's a clear sign that this thing's exactly right. No doubt in my mind that's a solid trend channel working up through there. No doubt this is a solid one coming down. Because once I had this upper one, I pulled it down to the low, and look where it bounces, almost to the tick. Maybe it went through a tick or two more. The first couple of bars really were almost right to the tick. Then it ticks one tick through and reverses. Comes up here, it's finding resistance, but it finally breaks through before it works on lower. And this is a good example here too. Even though you get a break of the trend line and a new low, that doesn't mean the trend's completely over yet. It continued to work lower until you got a reversal type pattern. It looked like it was going to try to reverse in here several times, but it didn't. It didn't finally get through successfully and go higher until here. And so now you're working a trend on the other side. And this is a short-term trend. You should have drawn that trend line down there off of those lows as well, just in case. Or you could have come up here and drawn it here, and you really could have found it even here. See how it fits right across there as well. And if you did that, if you tried it off these highs, you would have and dropped it down here, you wouldn't have been surprised when it bounced here. Really shouldn't have been anyway, because this is that midline of the channel and it's kind of working both sides. Then it starts working higher. And notice this short-term trend. You get a break, moves to a new high, and it corrects a little while and then continues on. But each one of these, there's a short-term one right there. You get a break, new low, and then it's headed the other way. This one really probably starts right here. You can see it working up that trend line, get a break, new high, and then it kind of corrects in here. Almost going sideways, but really all it's doing is going from the upper side of the trend channel to the midline. And when it finally, notice where, this is what's really interesting. I like to always talk about the key entry points, which are generally these trend lines. Notice how it turns up here, but it doesn't continue higher. Notice where you finally get another big move from, right off the one of these support resistance lines. Look where this big move originated? Right off this main trend line. Look where this big move originated from here, right off this first little short-term one. Came back and touched it here, and look coming down where the big moves generate from, off of this trend line. Corrections back to the resistance area. That's the key to it. And this is just a resistance area. It's a slanted one. There's horizontal ones like these, and there's slanted ones, which are trend lines. That's all a trend line is a slanted support or resistance line. And that's where all your key entries usually occur. Doesn't mean you can't get some big moves somewhere in between, but generally your best moves occur. Look where this one had. You got this trend line off this first one. It bounced right there, moved big, but look where the big move came, right off that trend line. And where does it reverse? When it gets to the other side, right off that other side. And then it pulls back, and where does it start going higher again? Same place, that same resistance line. And then it comes back and double tests it again. It goes higher, pulls back. It actually gets through, but it still generates the big move from there. And so hopefully that makes sense to you. Hopefully this is good stuff for some of you that haven't heard it before. I don't generally talk about as much about our theory and what we're looking for in these videos. These videos are really more for people that are already studying that to come in and compare their trades and their data to me, just to see if they're reading it right, seeing the same things for me, and to show them the setup so they can study those areas and learn to see it too. That's really the general idea. That's why I started doing this. I didn't start doing this just to put it out there. I did it to help people that are learning to read price action. It was for, in the beginning there was a handful of people, and it's grown into something much more than that, which that's great. I'm excited about that. But we'll get people that'll come in and say, why don't you talk about your losing trades? Well, we're not here to talk about losing trades. The idea is not to even show my trades. The idea is to show you the setups that occurred, the correct ones, and so you can study it and learn to see it yourself. That's the whole idea behind what we do, plain and simple. And so it's kind of nice the last few days to really talk a little bit more about theory until this thing kind of gets back to a more normal and manageable trade. And just to show you a couple of trades here on a reversal. Let me show you this reversal pattern here. You got a new low. It goes up, it shoots. Notice how it doesn't get much resistance there at the EMA. It kind of goes right on through and it pulls back. That's your first clue that, hey, this could be a reversal. It did it here too, but notice this was the new low, so you figure you're going to get two legs, and you get really two measured legs, and it starts going lower again. Comes back again, but it finds resistance there. Comes back here, and this time it kind of gets right on through. It does pull back, which is normal, but it doesn't really get resistance off the EMA. It kind of pushes on through. So that's your first clue, and then you get that move up, and then suddenly it comes back again. This would probably be an entry I would consider. That's a second entry long. It's still a doji. It's kind of iffy. I think you could have scalped out of that one regardless, and then it pulls back. But when it went lower here and fooled everybody, I'd definitely go along there looking for it to test this high and probably make a new high at a minimum. But you never know when there's a bigger pattern like it turns out to be. You don't probably see that big pattern here yet. It's possible you could have. But most people probably won't see that big pattern yet until you come back here. You notice how I drew that off those closes right across there. But regardless, if you drew it from that low to this low, that gives you that line, and you can pull it up here and start testing it, and you see that, hey, it fits all across here. And so you know you're on the right track. Doesn't mean it'll even come back into play, but that's how I do it. That's how you find people will come in and say, you put all these lines on here at the end of the day after the fact. No, that's not true. A lot of these lines we have on here by 9 or 9:30 in the morning. A lot of them we have to put on there later in the day because like this one, you wouldn't find this uptrend till later in the day because it wasn't created till later in the day. And this will show you the fact that this fits here so nicely off of these highs right here, and then you get a perfect midline, and the fact that that's a perfect measured move from here to here, and then again from here to here. off of these two lines that printed before 11 o'clock this morning tells you this stuff is not random. There's something here to it. There really is such a thing as market geometry. Don't ask me, I don't understand it, but the whole world, everything in life, it revolves around mathematics. That's the secret to, most all everything is there's a mathematical formula for everything, and it just so happens to be that there's a mathematical geometry involved in price action in the price charts. Again, I don't get it. I don't understand. I don't really care. I'm not interested. All I know is that it's real and it's valid, and so you can't ignore it. I mean, I guess that's the point I'm trying to make. Is it doesn't matter why. All you got to do is understand that it's real, and it's not so random as people want you to think it is. So when you hear that random walk theory, don't believe it. And here's another issue where somebody would say this was, if you took everything off this chart, somebody would tell you that this was a wedge here. And I always tell you there's no such thing as a wedge. There's other things. What happened was we found resistance across here in this up channel, and so prices are turning down off the horizontal resistance, but walking up the midline of this two-tiered channel, and that's what's causing it to look like a wedge. But there's no such thing as a wedge type pattern. And what the wedge traders would tell you that believe in that was, you trade the breakout of the wedge. And, my guess is they probably would have drawn it more like my line right there and then like this line right here. And they'd be telling you to go short here, which might be okay short term, but I'm guessing we'll go higher before it's over because this is still a valid channel working up through here. If they drew it the way I drew it, they would have went long, and you see they'd be getting stopped out now. So the trend is up. So if you're going to go in any direction, you want to go with the trend until there's a reason not to. And there's no reason to be going short yet. So, and I hope all this has been helpful. And, it's like I said, it's a little different than what we normally do. I know a lot of you want to see the trades, but I'm not even going to bother with them. There's just so many, and there's just so much to talk about that I think it was a little bit more exciting just to kind of talk about, show you the price action working and doing what we say it does, and even when times are crazy like now. And here's another thing. Notice this shorter term channel working up here. I talk about this a lot. Once you get an overshoot, a lot of times that will lead to a reversal or a break on the other side first. And notice you got your break here, but you had a clue that was coming because of this overshoot. And that would be a good reason why I may not go long right there, even though if you wanted to, I'm not totally against a long there. I would wait on a second entry cotton off the low here, and there's your first entry pullback. So you wait on a little trout basically, because there's going to be a lot of people that see this big bearish bar and think, hey, we're going down again. They don't understand. They don't know how to read the chart, so all they're doing is going by on what the pattern looks like. It looks like we're going lower again, and they get trapped. They all jump in and get trapped, and then it turns up, and all their stops start getting hit, and they all start exiting, and that's what causes it to surge off like that. And so if you understand what prices are doing, you don't go short right there. You may not go long either, but you definitely don't go short. So another reason right here why I guarantee there's a ton of people that got short on that little pullback right there. And you definitely don't go short away from the EMA after a big move down. That's suicide. Even on a runaway market, a lot of times that will be suicide. And you just don't do it. So anyway, that's probably enough for today. I hope it's been helpful. Hope too many of you aren't disappointed we aren't going over the trades. I know some of you will be, but we'll get back to that next week. Hopefully things settle down, and if they don't, we'll start talking about the trades again anyway. I just thought this would be a good time to talk a little bit more about theory, about price action, and how we trade the chart and how we look at the chart and how we find our targets and things like that. So hope it's been helpful to you. I'm going to wrap it up for the day. We'll be back again to do it tomorrow. This is Mack with priceactiontrading system.com, and we'll see you next time.